Australia's banking sector was bracing for losses today after major banks in Europe, including Credit Suisse, plunged overnight. Joining me now is our business reporter, Edward Boyd. Our market held up pretty well yesterday. Has it changed today?
Well, Laura, we've got the live ASX 200 graphic we can put up on the screen to just show the instant ASX reaction this morning. You can see market down about 1.6% in early trade. Futures were suggesting it to be down 1.8%, so it hasn't fallen as much as expected. But the banking sector is really going to be the sector in focus today. That's because banks around the world, overnight at least, fell in value. A lot of banks in the European markets in particular, Credit Suisse, their shares are at their record low at the moment. And it's really fears that the run on deposits that happened at Silicon Valley Bank could also occur at other banks. So investors are basically selling shares, banking their profits, taking their money out of these big banking institutions. Now, I think this is just going to be a temporary thing. I think confidence is going to slowly come back into the sector. We saw President Joe Biden in the early hours of this morning, our time, reassuring American deposit holders that all of their deposits were guaranteed. So I think this is just a temporary blip on the markets. So we'll have to see how the ASX reacts later today, because yesterday it opened down more than 1% and then it actually fought back during the rest of the day. So I think we could be seeing a similar thing today. So it is down 1.6%, but expect to see a bit of a fight back maybe over the next couple of hours as investors sort of digest what's been going on.
Okay, little fighter, the ASX today. Good to know, Ed. Just so you know as well, in this bilateral meeting between the US President Joe Biden and Anthony Albanese, just in the last 20 minutes, there was a question thrown in from one of the US reporters. Did you discuss banks with either the UK or Australian Prime Minister? And Joe Biden replied, I didn't ask to borrow any money. He said that with a wry smile. So good to know. Yeah. He's not panicking just yet.
No, that is good to know. And look, Biden was obviously coming out on the front foot this morning before he hopped on the plane to go to San Diego, just reassuring people in America there's no need to get too concerned. Obviously, if you've invested money in those two banks that collapsed, SVB and Signature Bank, then you have lost your money from your shares. So that's tough luck for you. But anyone that actually has money in the bank accounts for those banks is being guaranteed. So that was the positive message from Biden this morning.
Yeah, and in the social media age, you can see how these things can get quite contagious quite quickly, but we're not seeing that quite yet, but there is somewhat of a fallout. Let's talk the Reserve Bank. We haven't done that for a few days. That's quite unusual for us, Ed. The 10th rate rise we saw last week, that's put consumer confidence at its lowest level since April of 2020. Is that a good thing?
No, it's not. I don't think it's a good thing. So this is the ANZ Roy Morgan. It's a weekly consumer confidence survey. And yeah, consumer confidence following that RBA decision where they lifted rates for a 10th consecutive board meeting basically plunged to its lowest level since April 2020. This is a key chart here, figure 3, current financial conditions. That dropped the most. They measure a few different things in this survey, but current financial conditions is an important one. People are not feeling confident at the moment with spending money. They're really concerned, according to ANZ Roy Morgan, about rising interest rates, about having to put a lot more money aside on their mortgages. So not a good sign for consumer confidence, because when consumer confidence is low, people aren't spending as much money in businesses. But a side point to this, Laura, is the Reserve Bank wants to see people tighten up their spending. So people aren't feeling confident right now. They're not going to be spending as much money out in the community. Businesses are going to suffer, but it's going to, in a way, push down inflation. So this is one of the sort of signs that we're seeing of people tightening up their spending, maybe staying at home more, putting more money on the mortgage. And that's what the Reserve Bank wants. So there's been speculation the last couple of days now that the Reserve Bank may have done enough with interest rates. They may already be on pause. They may not lift rates next month. That's the speculation that's come up in the last couple of days after these banking collapses. So that's definitely one to watch as well.
Okay, Ed Boyd, thanks so much for that.